All right, as we continue to see this horrible Ukrainian-Russian conflict shock the world, a good question we have here at home is how might this war impact the U.S. housing market and mortgage interest rates? Now, before the war even started, we knew the Federal Reserve announced plans to start raising the benchmark interest rate, citing a number of reasons, and this did indeed happen on March 16th. 2022, with additional pressures such as surging oil prices, supply chain mishaps, increasing inflation. So a lot of people are speculating about the trajectory of U.S. real estate markets from here. Now, we are coming out of a couple years of incredible growth in the real estate markets, and so a lot of people are wondering, will mortgage rates become a headwind because of conflict, or is there less cause for concern? So if we were to take a deeper look at how the Ukrainian-Russian conflict is impacting mortgage interest rates, I think we should look at how oil affects housing and interest rates. Now, we recently did see oil prices just skyrocket, right? And it's been the big thing in the news right now. And while oil prices don't necessarily have a direct correlation to mortgage interest rates, I think the factor to focus on here is consumer spending, because as things get more expensive, there's less money for the other things, right? And so if we have if we have mortgage interest rates going up with gasoline, with the cost of food, etc., inflation, that's where we see inherent problems with potential impacts of the housing market. Furthermore, higher oil prices and gas prices will obviously have negative impacts on construction costs as well, and elongating completion times, and adding further stress to the inventory situation we have currently. Now, since oil prices are linked to the cost of production and shipping costs across a broad spectrum of everything in the economy you can pretty much think of, right? As prices climb rapidly, the Federal Reserve tends to raise the interest rate they charge banks, which we're seeing them do. Now, these additional costs usually are passed along to the borrower. Oil prices do have a tangible impact on other financial markets, in which turn can have a positive or a negative effect on interest rates as well. For example, mortgages are often tied to Treasury note yields, and since oil is a commodity, the rising price of oil can send people investing into safer things such as U.S. bonds and mortgage-backed securities, which will in turn have a more positive effect on mortgage interest rates and get them to go lower. Another way this hurts interest rates is because the U.S. dollar becomes devalued as we see inflation, rising costs of oil, etc. Similar to how oil can cause investors to shy away from risk, higher inflation devalues the investment held in U.S. dollars. Now, this includes safer investments like mortgage-backed securities, and so as demand for these investments decreases, yields tend to rise, which also causes higher rates. Now, as I mentioned, to curb inflation, the Federal Reserve did raise the benchmark interest rate 25 basis points on March 16th. And so while they're increasing these, it should help with inflationary factors, but it also means lenders will be shifting higher costs of borrowing onto consumers potentially. The key takeaway is the Ukrainian-Russian conflict has created a tricky situation for the United States economy, one which the Federal Reserve is going to have to monitor closely. And as supply chains are hit and prices continue to increase, mortgage interest rates can go either way, to be honest with you. One thing to note, though, is the Federal Reserve does continue to make a point of addressing this growing inflation by raising the benchmark interest rates, and we'll just have to see what policymakers do as this conflict with Russia, the Ukrainian-Russian conflict, continues. But mortgage rates may be increasingly volatile. Not that they haven't been unvolatile, right, for a very long time now. But, we could see, like I say, it could go either way. But we do think we'll see probably rates trending higher than lower in the immediate future. That being said, if you're looking to buy, refinance, etc., I am available for you. And if you want me to keep you on the radar for an opportunity, you didn't do a cash out loan in time and now rates are a little higher and you want to see what the market does, I'm happy to help you out, happy to put you on the radar list. So go to freshhomeloan.com. Make sure you like and subscribe. And I appreciate you guys for watching. Have a great day.
Yeah, Fresh Home Loan Inc. You want mortgage rates without breaking your bank? Well, I got what you need. I'll keep it 100. The very best lender. We sell money, yeah. There's really no equal. Independent mortgage brokers that work for the people. I know that the pandemic's brought many problems. What we offer is better rates.